afternoon from Los Angeles. It's Alyssa Corum and Ken Shreve here with a look at the stock market today. And on today's show, we are, of course, going to be breaking down the action among the major indexes. We're also going to be taking a look at a few individual names, including Broadcom, as well as Tradeweb and Splunk. But first, let's take a look at how we did today. The Nasdaq finished up 1.1%, while the S&P 500 and Dow finished up 0.8% each. So that's positive action, but what was the volume like here today?
Well, the volume was really disappointing on the major stock indexes all day. Nasdaq volume and NYSE volume was really much lower than what we saw during Monday's decline. So we had sharp losses for the market Monday in very heavy volume, and then a nice rally today. We closed off highs. I see the Nasdaq up about 1.1% now. So we closed off highs today, and there was just never really any volume behind the rally. So this is still a market that has suffered some technical damage.
Right.
It still needs to sort itself out. Nasdaq strength fueled by software and chip stocks, but one day of strength is not going to put the market all of a sudden back into an uptrend.
That's right. Even if we do continue to head higher from here, Justin and I were talking yesterday about how the 50-day line could turn into a potential resistance level on the way back up, and then would want to see support at the 200-day.
Yeah, exactly. So the Nasdaq and the S&P 500 are in that situation. Even with today's gains, they're still below the 50-day line. The Dow Jones today actually found support at its 200-day moving average, but it's still well below its 50-day line as well. So, like I said, some technical damage in the market that still needs to sort itself out. Good day of gains today, and we'll see what tomorrow brings.
That's right, and the market outlook right now also means it's not a great time to be aggressively buying stocks or thinking that stocks are on sale right now, because we don't know when the bleeding will stop yet.
Yeah, and remember that we put the market uptrend under pressure several days ago, so we were starting to see handwriting on the wall. It's not that anybody was expecting the broad-based losses on Monday, but we were seeing signs of distribution in the indexes, and so with the market in a correction right now and the market tide flowing negative, it's really not the time to be looking for new buys.
That's right. Well, strength in semiconductor stocks today, and we also want to take a look at Broadcom, which rose about 3%, retaking its 50-day line after a breakout not all too long ago. So how are we feeling about this bounce? Another volume issue here with Broadcom.
Well, exactly. You saw the stock yesterday fall in very heavy volume along with the major stock indexes, and you had a nice rally for chip stocks today. At last check, the Philadelphia Semiconductor Index was up more than 2%. So Broadcom definitely keeping pace with the stocks and a move above the 50-day moving average, but very, very light volume to the upside. So normally when a stock is finding support or reclaiming the 50-day moving average, you really want to see it do it with conviction. We've talked about that before. You want to see a good volume push when it's happening. Didn't get that with Broadcom, and like we said, with the Nasdaq and S&P 500 didn't get it in the indexes either today.
That's right. Well, it is good to see it above the 50-day line. We'll have to see how it fares from here. And Splunk also retaking its 50-day line after losing that level in Monday's session. It closed today with a 3.3% gain. Volume still light here, but it's holding within a base pattern.
Yeah, it is, and it's another lower volume gain today, so not much conviction behind the buying. But this is still a chart that is very much intact. We're going to hear from Splunk May 23rd earnings. So I believe that's next week. They're going to be reporting, and this is a chart that still shows a buy point of 140.85. So could be a candidate for a call option trade. We'll see what earnings look like next week, but software stocks among the top performers today.
That's right, and so far this year. So it's just been a standout group with a lot of stocks that have not only shown strong gains, but have also formed some nice looking base patterns as well.
Yeah, so in this group, Splunk's industry group, the database software group, you have Splunk, and then MongoDB was another database software firm in the screens today that is in a good technical setup as well. Still seeing stocks in the software space like Splunk and MongoDB showing relative strength doesn't mean that they're buys. We've got to pay attention to kind of weakness in the broad market now.
Exactly. With earnings on the horizon, we'll have to see if the market can cooperate. And we want to take a look at TradeWeb, a recent IPO which staged a breakout over an IPO base today. There's been a lot of stocks going public this year, so we've had a heightened attention on the IPO market. And TradeWeb finished the day up about 1.3%. Got a little turned away from the buy point here, but the relative strength is notable.
Yeah, I mean, this is interesting. It was a breakout from an IPO base today for TradeWeb markets. We were looking at earnings from this company last week, and frankly, it was a little bit disappointing. I mean, the stock responded okay to the earnings report, but when you have 10% earnings growth and a sharp deceleration in sales and a negative estimate for the current quarter, it's just not all that exciting. So technically, it's a very healthy stock. TradeWeb Markets is they basically operate electronic over-the-counter marketplaces for derivatives trading and the like, fixed income derivatives trading. So profitable IPO, technically healthy. We have some questions about fundamentals, but a solid performer today.
Exactly. That's why we like to look at the fundamentals in addition to the technical action. So with that outlook with declines expected for 2019, analysts expect a decline in earnings of 9%, so not the kind of growth that we like to see with top growth stocks.
Yeah, exactly. Like I said, in the latest quarter, earnings up 10%, sales up 17%. So, listen, it's a profitable IPO. There is something to be said for that.
Sure.
Lyft and Uber operating with big losses, but TradeWeb is profitable. It did close below the buy point today, so the 44.35 buy point is intact here, but we'll see if we can reclaim it in solid volume sometime this week.
All right, well, just one of the many IPOs on our radar, and they should be on your radar as well. All right, everyone, thanks so much for watching today. We hope you check out investors.com for all the latest stock market news and analysis. You can also check out our content across social media, whether that's on Facebook, Instagram, YouTube, or Twitter, to stay up to date on all the latest. Thanks again for joining us, and we'll see you right back here tomorrow.